Hey everybody, this is Dr. Tom Carr of drstocks.com, drstoxx.com, and our sister site, drstoxtrading.com, drstoxtrading.com. In this video, how to find the market's hottest stocks using the MarketSmith tool, I'm going to introduce you to my favorite charting and screening tool. It's put together by MarketSmith, which is a division of Investors Business Daily. You'll know them from the periodical, from the website investors.com. Perhaps you've read the founder's book, Bill O'Neill's book, How to Make Money in Stocks, one of the best all-around trading books that I've read. And they have put together the system, the primary system that Bill Smith uses in his stock selection process into MarketSmith. So when you're searching for stocks using MarketSmith, you're actually going to be falling in line pretty much with the system that Bill O'Neill developed called the CanSlim system. Now, just before we get to the tool itself, let me just tell you a little bit about myself and the work that I do. I am the founder of drstocks.com, and this is our primary site, Dr. Stocks. We've been in business since October 2002. We've served over 15,000 clients all around the world through our daily, weekly, and monthly stock pick advisory letters. We also teach people how to trade using manuals and webinars. We have a private coaching service and a managed account service. And if you're interested in our stock pick letters, you would click on the subscribe button or that button there just then, and you'll come up with one of our 3 letters: trend trade, ETF trend, and momentum letter. And then our sister site is Dr. Stocks Trading. We launched this a couple of years ago, and we publish here our 2 most profitable newsletters: the Hot Stocks letter, which averages about 160% per year, and the Penny Stocks letter, which is even better than that. These are weekly letters, so if you're not a frequent trader, that would be where you want to go. I'm also the author of 3 best-selling trading books and a new book that just came out a few months ago, the second edition of my first best-selling book, Trend Trading for a Living. And let me just introduce you a little bit to the content here, because there's some really good stuff in here. If you are new to trading, this would be a very good resource to get started with. You'll find here an entire course on how to read price charts. You'll find a very meaty chapter on how to set up your bullish and bearish watch lists using my proprietary fundamental and technical scans. And I'll show you how to do that using a free online tool. And you'll then learn 5 bullish trend trading setups, 5 bearish trend trading setups, along with a short course on how to short a stock if you've never done that before. And then 2 bonus systems, the bull and bear mean reversion setup and using options to maximize your gains. Then one of the things that is new in this new book, this new version of the book, is a very detailed, high-level chapter on money management. The most important part of trading is money management. Okay, well, let's get back to the MarketSmith charts. I have a chart up here of Apple just to introduce you to a little bit about how MarketSmith charts work. They do a number of things that are very helpful to the trader, particularly those of us who use technical analysis to get in and out of trades. One of the things MarketSmith charts does is draw in chart patterns as per William O'Neill's book. So it's looking primarily for cup and handle patterns. It also will draw in double bottoms, double tops, and head and shoulders bottoms, head and shoulders tops. Those are the 3 primary chart patterns that it looks for. And then it will also give you exact entry price points that you want to buy the stock once it passes that point. It will tell you where to sell the stock if it goes against you, and where to start taking profits if it goes in your favor. So here we have, for example, here's a double bottom marked on the chart with a buy point above 178.94. It crossed that point on this particular day, which was the 4th of May last year. and it went from about 179 to 229 in just a few weeks. There was a secondary buy point up here when it crossed over this little cup formation, and it went from about 195 again to 229 and on up to 233. The chart then started to form this big cup and handle, big cup, little handle, which did cross over the pivot line around 197.70, went up to 215, didn't quite hit what MarketSmith would consider to be the primary target price before it started to sell off with the rest of the market, and that's kind of where it's at now. But one of the things I want to show you with MarketSmith is that not only do you get technical analysis on the chart, but on the same chart you've got their proprietary ratings that are based on fundamental analysis. So you have your EPS rating, which gauges the growth of earnings of the company. The group relative strength rating, so Apple is in the mobile device group, I guess, personal computer, they do all kinds of stuff. And that group has a relative strength rating of B on a scale of A to E. B is good, that's in the top tier. SMR rating is unique to MarketSmith and to Investors Business Daily. It is their sales, margins, and return on equity rating. So they combine those three things together. Sales are hugely important. If you're looking for strong growth stocks, there are all kinds of ways of fudging the earnings growth, but the only way to gain in sales growth is to sell more of your product. So strong sales growth rating is hugely important for any company. A big margin will give you a strong pricing pressure and a margin of safety around the stock, which is always important. And then return on equity shows how efficient management is in managing the company. You have accumulation distribution rating. You have your overall composite rating, which is ranking this stock against the universe of stocks that Investors Business Daily covers. And then you have a timeliness rating, which is your technical analysis grade, which is not very good for Apple right now. It's a C in the middle of the range. So, and then all kinds of other things. You've got past earnings growth. You've got whether the company is raising or lowering estimates, and all kinds of cool, nifty things there. Now, a couple of neat things that are in addition to what you've just seen already. You tag on this little side wing over here in the chart, and you'll come up with the various ranks of the industry that the stock is in and where this particular stock ranks in that group. And then if you click on this button, you'll get all the stocks that compete with Apple, that are Apple's competitors. So if you think, for example, the industry is going to improve over the next few months, but you don't really like Apple, you click on this button and it gives you all the stocks in that industry, and you can rank them by composite rating if you want. You can rank them by earnings growth, and so you'll pull up the best stocks in that list up to the top, and you can start looking at those charts. Over here off to the left side of the chart is what I really want to focus on today, and that is the screening tool. If I wanted to create a new screen, I would click on this button, and let's try a new stock screen, and let's just name it new screen. Save it. And then I have all kinds of criteria to choose from. These are the proprietary ratings that you'll find only in MarketSmith. You've got all kinds of different ways of configuring earnings growth, sales growth. You've got you can select which industry or industries you want to focus on, how big of a market cap the company has, its enterprise value, price and volume. So if if you want to stay away from penny stocks, you might type in 20, or if you like trading lower price stocks, you might type in 10 over here. Of course, that's not, you can't put those both in, but And you've got volume, some volume markers if you want to make sure the stocks you're trading are fairly liquid, and so on. Margins and ratios, general stock criteria. Make sure that it is or is not an ETF, whether it has options. Is it something on the foreign exchanges? Is it an IPO? And so on. And then you've got you can check to see whether the stock was listed in the IBD Top 50, whether it was featured in a recent New America column, if it's part of the 85-85 group, that is at least 85 on earnings growth out of 100 and 85 on the composite score, or is it on the list of the big cap 20? And all of those, when you think about it, you've got several hundred, if maybe not 1,000 or more combinations of various fundamental and technical parameters that you can put into your screens. Now, I have already built several screens here. I've got a tariff-free scan, so these are stocks that are under the radar regarding the current problem we're having in our market, which is the China tariff deal, and it's putting everybody in a bit of a concerning state right now, and the market has been trailing off. But this highlights stocks that are actually rising at this point. So these are clearly stocks that are not affected by the China deal, and I want to focus on those. I've got a penny stock scan, which is a mimic of the scan that I use for my penny stock letter. I've got a dividend growth. I really like dividend growth stocks. These are stocks that pay a strong dividend but are growing in earnings and sales, and those tend to be really stable stocks to trade in a volatile market. I have the bullish watch list, which comes straight out of my book, Trend Trading for a Living, and I've got all those criteria in there. I have my best cheap stocks scan, which I use for one of my newsletters, and then I've got my top stock scan, and this is the scan I want to focus on today. So you can see here my filters over here on the right. I have EPS set at 95 or better. So I want this to be in the top 5% of all stocks based on EPS growth, sales growth, earnings growth rather. And out of the 7,700 stocks that IBD covers, there are 237 that passed that particular filter. I also want, of those 237, I want all the stocks to be at least ranked at 90 on the relative strength scale. So these are stocks that, generally speaking, are trending higher. They're in the top 10% of all stocks relative to the S&P 500, outperforming the S&P 500 for the most part. I want an SMR of A on a scale of A to E. So that's in the top 5% of all stocks for sales growth, margins, and return on equity. All three of those hugely important for finding stable growth stocks. I want an accumulation distribution rating of either A or B, so about the top 25% of stocks, and a comp rating of 95 or higher. And of course, most of the stocks that pass all of these other filters are going to be at 95 or higher, so that only weeded out a couple of stocks. I want the group relative strength that this company is in to be in the top 25% of all groups by relative strength. And I've added this one here, which is something I learned from Zach's investment advisory. I'm also a partner with Zach's, and I've studied the work of Len Zach's, who's the founder, who wrote his PhD at MIT on this very thing. His studies showed that positive earnings surprises, and especially when the company raises earnings beyond what everyone was expecting, tend to be the most strongly correlated with short-term, near-term price movement. So if the company surprises the analyst expectations when it announces earnings by at least 1% or more, that tends to be positively correlated with near-term price movement. So all of those taken together give me 19 stocks that I would consider to be the best stocks trading in the market right now. Now, to view those 19, all I have to do is click the button, and it will populate this table down below. And at the very top, I have these sorted by, well, I don't know, I guess by comp rating. So all the 99s are at the top. And my number one stock is CoStar Group, which I really don't know much about at all. But let's take a look at the chart. You just double click on that, and we've got a really nice looking chart here. We've got a big cup, which never performed a handle, but which did break out on the 27th of February of this year at a price of around well, this is a very high price stock, isn't it? At a price around 450. And it went from 450 all the way to a peak of about 530 before pulling back a little bit. But consider now that the market has been in very strong sell-off mode for the last 5 weeks. This is a daily chart, so if we look at 5 weeks of time, which goes back to about here, this stock has been going up, not going down. This blue bar here represents the buy zone. So according to the rules of CanSlim, the rules of investors.com and how they like to configure their trades, any buy in this blue bar is a valid entry. And you want to hold it till it tags this green bar up here, and that's where you start to peel off some of your profits. Maybe you sell a quarter, maybe you sell a half, and then you move your stop up to break even. This is the stop zone down here, so if it gets down to that level, you would want to get out of the trade. Obviously, it's not going there anytime soon. So that's the number one on our list. Actually, all these 99 ranked stocks are pretty much even. Here's another good one. Gave a buy signal back here a few weeks ago, the 2nd of April, at a price of around $21.40, and it went all the way up to $24.62 before pulling back a bit. That's tagged back into the buy zone. You could have added to your position here or bought a second batch if you came to this a little bit late. EPAM Systems, also looking good considering the market sell-off. This one gave a buy signal back here on the 1st of February at around 145, and it went all the way up to 180 a few weeks later. Nice trade without taking much of a major dip. This is the kind of thing we want to see. Now, the market's been very choppy in the last few weeks, and you can see that choppiness reflected here, but this is nothing like what we're seeing in the overall market. G-Lobe is one I have a long-term position in, been a long-term holder of this stock. It's an amazing, fundamentally sound, growing company. Really like it a lot. It gave a buy signal just over 74 in early April. It went all the way up to 93. Nice looking move there. It's a little too late to buy into that one now, but that's a good one. CyberArk is another stock I have a long-term position in. I do trade in and out and around that core position, but I've been in this stock for years. It gave a very nice buy signal back here on the right at the end of January at a price of around 85. It tagged a 25% gain just a few days later, and it's continued on up from there. Now the market is trailing down over the last 5 weeks. This is doing nothing but going up. It's even staying above the green line here, which is your 20-period moving average. Really strong looking stock. Let's do one more. Trade Desk is one that I like to trade quite a lot. I bought this little dip back here, back to near the buy zone, and immediately within a couple of days I was strongly in the money. I bought it at about 174, and a few days later was able to peel off some of that profit at 205. Still have some position on right now at around 200. This gave a buy signal on this particular day here at around 162. It shot up immediately to 202, it looks like on an earnings announcement, all the way up to 232. Really strong stock. This is all good stuff. So these are the kinds of stocks you're going to find with that growth screen, that stable growth screen that I mentioned. You're only going to find those kinds of filters in this tool, this MarketSmith tool. And I'm going to give you a link here in the video and down below if you want to take a very cheap trial to MarketSmith, and click on the link and you'll be taken right there and you can sign up. All right, God bless everybody. We'll see you on the trading floor. Bye now.